You know, one of the greatest accomplishments going into retirement is paying off your house, having that mortgage knocked out. As your budget is the most important number in your plan, we got to remember property taxes still remain. Today, I want to talk to you about how property taxes can impact your long-term retirement plan. Keep it right here. Good day, everybody. Chris Herline here of REAP Financial, host of Retire Ready TV on KXAN and host of Wealth Radio every weekend on News Radio KLBJ. Be sure and hit the subscribe button, hit the bell for notifications. I drop new content on this channel every Wednesday so you can stay on top of the latest. Today, I want to talk about the impact of property taxes on your retirement. I want to make sure you stick with me today because being unaware of taxes can derail your retirement income. So taxes are one of the greatest expenses you'll face in retirement, along with healthcare. And having the mortgage knocked out is a great way to build a foundation for a successful retirement because the mortgage payment's typically your largest outflow. You get that thing paid off, you turn 65, and the taxes freeze, at least the school portion does. But the taxes still remain, they still come in. And, you know, if you live here in Central Texas, property taxes is like having another mortgage. I mean, it can be very, very expensive. But you also got to consider how you're going to pay those taxes. Are you going to be paying them monthly into an escrow account like many of you may have over the years, where it's just taken out of your payment, out of your checking savings, however you're paying it? You know, we cannot have this expense, which can be a large annual expense, be a surprise. You can drain your cash reserves too early or too soon throughout the year. You may have to sell off equities throughout the year or at the end of the year to pay that property tax bill. That generally can create taxes. So it's kind of a compounding or a snowball effect that you really want to be aware of. Taxes in your retirement are inevitable. You're going to be paying taxes on your Social Security benefits, more likely, your IRA distributions, and a lot more. But I've always talked about how retirees, if they plan appropriately, they can have more control over their taxes in retirement than any time in their life. And so you just need to be thinking through how you're going to pay these property taxes. What accounts are you going to be using to fund those? How is the tax going to be hit on the dollars you're using? Now, if you have questions along the way, be sure and leave those questions in the comments section down below, and I'll try to address those in future videos. Let's talk about another thing you want to be aware of. If you're going to downsize, if you're going to sell your home in retirement, well, that can create taxes, right? If you've got a highly appreciated home here in Central Texas, you may have to pay capital gains taxes. Just be aware of that when you go to sell. But there's a few other things you really want to be mindful of is, okay, if you're going to sell, are you going to be able to go and get the new house with the proceeds you receive from the sale of this current home, or are you going to have to go out and finance? Interest rates are high at the time of this recording. And I'll tell you, the days of 2% and 3% mortgages are gone. I don't think we'll ever see that again in our lifetime. So if you're going to finance in retirement, you need to be thinking about how that's going to impact your long-term budget, okay? Now, let's say you're going to pay cash for the home. A lot of people downsize, they move because they want to be closer to family. That's great. If you're going to stay here in Texas, fortunately, we don't have state income taxes, but we have clients throughout the year that move to states to get closer to family or whatever, that do have the state income tax along with property taxes. Now, your property taxes may not be as high in that state as they are in Central Texas, but I'm going to tell you the impact of state income taxes on your retirement income plan can be substantial. We had a client that was going to move to the Northeast, and this state has a state income tax. And, you know, after some analysis, we're looking long-term, 20, 30, 40 years out. And by moving to the state that had the state income tax at the end of life, let's call it age 90, he had literally a little over $150,000 less in his retirement nest egg. Same rate of return, same budget. It's because of state income tax. It took a toll of over $150,000. Now, he had enough net worth that it wasn't going to be an issue, but the point is you don't want this blindsiding you, okay? Also be considering where you're buying your house and the property values. We have seen tremendous appreciation in Central Texas over the last decade. There's other parts of the country where it doesn't appreciate that well, or in times of recession, we've seen property values drop dramatically. More so in other parts of the country, Texas has been rather insulated, but you just need to be thinking through the long-term implications of that, because a lot of families count on their home equity in late life to pay for things like long-term care, home health care, or just sustain their lifestyle. So be mindful of where you're buying, be mindful of how you're going to pay the taxes when it comes to property taxes, be mindful if you're going to be paying state taxes because of those implications. And then, ideally you're working with a fiduciary advisor, or you got a great CPA that's talking with you about ways to reduce your tax bill each year. And that's through proactive planning. It's an idea of having a good sense of what money you're going to live on in retirement, because all the money is generally taxed differently, right? You got cash at the bank, CDs, money markets, you're paying tax on that every year. You've got Roth IRAs, health savings accounts, that's never taxed money. You got IRAs and 401ks, that's always taxed. So you've got to be mindful about the withdrawal order, what accounts you should hit first. Maybe it's a number of accounts at the same time, but all of these things work hand in hand for true success in retirement. So be mindful about how property taxes will impact your retirement income. Now, this next video talks about managing a second home in retirement. Click here to watch now.